Hey guys, DJ from PTA. I'm going to go over August 2nd trades just to kind of give you a quick breakdown of what was going on in the market. No trades for me today. I had a big hit yesterday, took the day off, had some personal things to take care of. Probably be back to the desk in the next couple of days just to, give yourself a breather. Whenever you take a big hit, I always tell traders, just take a day off, relax, regroup, take a couple of days off, and then get back at it. So today I'm going to go over the SPY, APDN, CZOO, and Uber, UBER, was the ones that had some decent moves on today. So just want to go over those. Going over the SPY for August 2nd, we had a down day, closed out red. As I told you guys before in previous videos, you can check those out when you get a chance. That this critical area, which is previous week high, I was looking at as a critical area for the breakdown. I figured we would get a bit of a rejection there, and that has been proven on today. So it's one of those things where you got to kind of pay attention to what's going on generally in the market. Now, everyone wants to look at this as a uptrend, but I mean, at the end of the day, we're still down trending in a way. We're just in a channel. So this being here is the last part of this channel. My idea is for it to go back up over the next couple days, or we may get a significant breakdown from that area back down to a key zone. I would say back down to this trend line. This is looking like a reversal based on the chart pattern, but time will tell. Once we get over this trend line, I will be calling out for a long-term move. All right, so even though in the short term there are trends that you can play, because this definitely is a short-term uptrend. I'm getting some momentum there. Looking at APDN is the next one we're going to go over. APDN was a nice move coming into August 2nd. So this move here, we had 117 million in volume. A lot of volume off of that. So let's kind of break down that day. So as I always do, I always take a look at the critical areas that we're looking at for this. So any type of breakdown area would be good. So right here is a good area. Why? Because we had a bounce, a pull down, a respected, and pulled down. So that $1.50 is critical. Next area would probably be somewhere like right here. This is where it broke down from $1.89. We're gonna just round it up to $1.90. Next key area would probably be here. We had a breakdown here. We'll call that 240. And then we had some respecting here with a bounce. And then they respected here, respected there. This will be considered a key area because that's where it gapped down from. We'll make that 320. This is definitely a deep area right here. Make that 475 maybe. And here will be a good area. Rejected, rejected, rejected with a pull down. We make that 405. And you can call this area 430. I'm gonna just say 430 there. So those are all our key areas. So if we break this down to the 5-minute looking at it, you can kind of see how the stock actually played out on that day. We had this rip back up through these two areas. 280 was that close for the day, but you could see the rip. Then you can see the slam right back to that 190 area, came back, respected it, and then got good at it. I would say about 230 entry is probably where you wanted to be at on that particular play. So let me pull up my snippet tool so I can go over this trade with you guys to break it down. Just looking at this based on the 5, this was your key area right there. I would say about that 230 area. If I zoomed in, about 230 and 227, 230 area right there with a risk to 211. So about 20-cent risk. And then we had a nice rip in the game. So that turned out to be a pretty decent trade around that 230 area, and then it went to 617 pre-market today. So that was a pretty good move. That's a good, nice risk to reward move. You definitely want to take advantage of that. DNA, I actually think our members and subscribers receive the email on that move as far as the information coming out early, as well as a really decent move. This was one of those monkeypox moves. We're in that monkeypox stage similar to COVID, so we're looking for all those stocks that actually make those type of moves. Okay, so going forward, looking back at CZOO. So I'm gonna go back out to the daily. Let's go to CZOO. CZOO was another decent play. Looking at the chart, had a lot of volume on the second. That would be north of 141 million in volume. So looking at the stock, I probably would have, this definitely right here being 85 cents being a critical area. That's off of previous month, and you can see that it broke down from there. It respected it. Right here is a critical area where it broke down from, I'll call that the 115 area. Just make it 115, and that would respect. Then from here, this is where it kind of broke down from. I'm gonna put that as 150, and that's pretty much it. You can look at this area as a respected, reject, and then a pull down at 260. Just put that at 260. So that's what I'm thinking about is the areas would have been going into that day. Let's take a break down to the 5-minute and take a look at it. And you can see that as soon as it got out of the range of 85 cents, which was previous month high, we got us a big reach. It slammed to that 115, came up to the 150, came back, respected that area, and then took off. This would have been a pre-market play simply because of the amount of volume it had in pre-market. It's probably why most traders probably squeezed in here. Let's go down to the 1 minute to kind of get a better visual. Some probably got in there. Looking at it, it definitely had a hole, and then it was a break there. Looking at the 5 going back, it's probably your best entry. Right here was another entry here. I probably would have played it off this area here. This was one of those steep trends. So let's look at the 15, see if we can get a better eye on that area, or was it just going up? Yeah, that was probably right there. That's a 10. Let's go to 15. Got to turn. So yeah, it would have been about a 10-minute pullback. I would say a 5-minute play. That probably was ideal there. Let's go down to the 1 minute, see if we got any pattern or style. Yeah, we do. So right there, we had a resistance and then a kind of a break. This one was a little bit of a tricky one. I probably would have played it off of this area here after it had bounce, made support, came back, and then probably jumped in about there 116 and rolled it back up to 179. But the real play was probably here at this 85-cent break. It probably a lot of players got in there, and then the rest was just everyone else was playing chase. So, and then it faded today. So, quick pop, a quick, even from 85 cents to 179 is almost a buck. So you could have really loaded up on this one because it's It's one of those penny stocks. So it's one of those deals you can really load up on and get a good risk to reward on this particular play. All right, so the last stock that I want to go over is Uber. Now, Uber is not something we would play on a normal basis, but again, we look at patterns. So the thing was that this stock was already had some good news, some things going on with it that made it where it wanted to move. And that day it had some abnormal volume. That volume had 107 million that day. And then looking at the chart, it's really just been in a chop fest. Like it's just been chopping, broke down, made a low at 1990, and then now it's gapping back up looking for sellers. This probably would have been an area because it's where it reject. And then right here probably was an area just because it rejected here and pulled all the way down. So looking at that, be $28 would have been a critical area there. And then this one, $29.40, I'll leave it there. We got a bit of respect and a bounce there. This right here would have been critical, and this right here would have been critical for the breakdown. I'm gonna call that 32.70. And then I'm gonna call the other one 34.20 is fine. Reject, and it bounce. So this is your area. So going back into the actual chart, if I take a look at this, you can see, and this is where all the confusion was at 28. As soon as it broke out, respected it, broke out, and then held, your entry would have probably been somewhere around here. So looking at the higher time frames might be a little bit clearer. No, not really. So this was really just had to wait for it. So looking at it, yeah, it was a big rejection here. So it found some support at 27.56. So I'm gonna just call that 27.55. 27. And we're gonna mark that purple. Remember, that's entry day. So we had a held right here, and then it came back, respected, bounce. This 28 was critical. So when I'm thinking based on the chart, most people probably would have squoze in right there with a risk to here. So you're talking about 28.14 risking to 27.81, about 30-40 cents. You probably could have got it a little closer looking at the 1 minute. Let me take a look at it. Yeah, you probably would have kicked back, bounce. Somewhere right here would have been your entry, risking to here. It didn't even pull back, but it was it was pretty choppy going into it, and then rebounding and actually going to 31. So it looked like anything over 28, it was a fly. As long as you risk properly, anything holding over 28. When it held 28 here, I think that's when everyone else got super involved. Went from 28 to 31 and it's still up. So that was a pretty good play as well with the Uber play. So guys, if you have any questions, concerns, leave them in the comment section. Hit that like button, hit that subscribe button so you don't miss none of our videos. Turn on your notification just so you'll get alerted for it. And guys, no matter where you at in your trading career, the key to it all is studying charts, studying patterns. So as I always tell everyone, stay studying and stay focused.